All right, so let's go over the call position I took today, why I took it, how I took it. First thing we're going to do is start on the 1 hour time frame on Triple Q. That is what I do every single day. There's no ifs, ands, or buts. You always have to look at the 1 hour time frame. So the first thing you'll notice if you look at the 1 hour is we have a demand zone down here at 600. We have a supply zone up here sitting at 625. We also have this really, really big fair value gap at six between 615 or 610 all the way to 618. So this area is going to be an area in which buyers will be resting. There will be buy orders here. So price usually pulls into fair value gaps, uses it, finds resting liquidity, and then pushes out of it. That's what we're looking at. That's the three levels to keep an eye on. These are going to be called our optimal trading zones. So you want to keep all these areas in mind when you're trading on your lower time frames. So now that we understand that, we know what's going on, we know all the important levels on the high time frame, we can drop down to the M15. So the M15 is kind of where the intraday levels are going to start to come into play. So we have the same kind of like setup, right? So we have supply at 624. That's from yesterday's pre-market or yesterday's aftermarket. So this candle right here is going to be our supply zone. We want price to essentially pull into this level if we were to break to the upside. Um, we also have demand in that fair value gap. So remember, I told you guys the levels for that fair value gap. You can see the demand zone formed in that high time frame fair value gap. So the more you look at multi-time frame analysis, the more you will recognize like different patterns and how price reacts in certain levels. So this is all you need to do every single day. 1 hour, drop to the M15, drop to the M1 for your entry. So now that we're on the M15, we're kind of visualizing how everything pulls together. We're looking at different zones and different areas to basically buy in. You guys can see this morning we broke to the downside. It's the first thing we did. We broke under a 20 and 50 moving averages, giving us a flush to demand. Once we pulled into demand, you can see price starts to consolidate. We have a doji candle form. We have price still consolidating, never breaking below this higher or this lower low right here at 617, showing us that buyers could step in. And if buyers step in, we want to be there to make sure we can take longs. So essentially what we're doing is waiting for the M15 to show us a move to the upside. You can see we get a big bullish engulfing candle forming this fair value gap right here. You could have taken entry here. This would have been a very aggressive entry because we didn't break above our 20 and 50 moving averages. We didn't break above our previous swing high right at 620. All we did was bounce out of supply. So that's step one. Usually you want to have like 4 to 5 different confluences to get into a trade. You don't want to get in based off of one. So since I got that break from our demand and we pushed over our 20 and 50 moving averages. We formed fair value gaps. We even pulled back into a fair value gap on our M15. We've price break below above our 620 swing high right here. Now we can drop to our entry time frame. So that's going to be the M1 and the M3. And usually when we drop to our entry time frames, that's where all the magic will happen. So these calls that we ended up taking, you can see that price did push pretty hard to the upside, but the initial calls that we got into, let me see if I can find this area over here. So this is where we got in to our calls. Right here, we have this double bottom that formed, and this is exactly what the setup looked like. It was a nice 3-to-1 risk to reward. I'm gonna break that down for you guys. Now that we know we have our 1 hour demand. We have 15-minute demand or 15-minute fair value gap and demand. Um, our high time frames are aligning. So now we drop to our entry time frame, and that is where you need to wait for things like patterns, candlestick formations, different things like that. So you have double bottoms, double tops, head and shoulders, inverse head and shoulders, rising wedge, falling wedge. There's a bunch of different things. You don't have to memorize all of them. They don't really happen as often as people think, and when they do, sometimes they're hard to spot. So there's indicators that you can add, like I believe if you go to indicators, all chart patterns. You can do this, and it looks fucking insane. But it will show you, like, all right, so we have a rising wedge, we have a triangle pattern here, we have a double top. There's top two. I don't know where top one is or where it's trying to say it is. But basically, you have indicators that can do that. It does get very messy on the 1 minute though. Don't recommend it, but it's there. Indicators are a tool. Don't rely on them. Use them to help you, though. They will help you see a lot of things. All these YouTubers and people that are like, oh, don't use indicators, they're retarded. I use indicators all the time. It is very, very helpful, very easy. Anyway, on to the next. Um, we have the 1 minute time frame. This is going to be our entry time frame. So you guys can see prices consolidating. We already know that our 15-minute demand zone grab liquidity pushed. So now we're looking for entry. We did get a break of structure right here, but I did not take entry right here. I waited until price gave us a better entry. So we have these swing highs right here. Initially, I was looking to get into this trade at 621.20, and I did get entry, but I got stopped out at break even because price started to consolidate. So I got an average cost of $26. It ran to 30. I got stopped out at 26. My re-entry is where the magic happened. If you guys look right here, we have a double bottom that formed with equal lows right here. We have a bullish engulfing candle formed, breaking this neckline and giving us continuation to the upside. So this was a picture perfect double bottom bullish continuation trade. And then aside from that, I mean, yeah, we have a couple other trades we could have taken. We have a change of character right here. We probably could have rode this all the way up and targeted this for a PT1. There's a couple ways to go about it. Everyone trades different. Everyone trades and sees different things on a chart, but this is just the gist of what I saw today and why I was able to get my entry today. But it all starts from this 1 hour. This 1 hour, like I said, optimal trading zones. You drop to them 15. You look for more optimal trading zones. You look for fair value gaps, supply demand that aligns with your 1 hour. And then your 1 minute and 3 minute is going to be your entry time frames. So just keep all those things in mind. Understand what trend is doing. Look at what the chart is showing you and make sure you apply everything that I'm telling you. Everything. You have 20 and 50 moving averages. We have price breaking above that. Okay, so buyers are taking control. We've pulled back to the fair value gap. We have bullish momentum from that. So buyers are taking control. We have a break of structure. Again, buyers are taking control. Notice how all of these things are telling you that buyers are taking control. So you can look for longs and you can target swing highs or previous swing highs from before. But if you're just like getting in randomly, like if you zoom out, this looks crazy. But if you really look at the bigger picture and you understand what's happening, this becomes so much easier because you're preparing for the move before it even happens or before it comes. So I hope you guys learned a decent amount from that. I'm gonna end this now, but I will drop another video tomorrow with whatever trades that I take, even if it's a loss. I'm gonna do this every day so people can learn and pick my brain and understand exactly how I do what I do, so you can do what I'm doing on your own one day eventually.